All right, I definitely want to share a few lessons with you. So let's talk about you enter this trade on a 3-minute chart and you want to manage it on a 1-minute chart, okay? You want to keep things tight. That's the only reason you would do that. You wanted to keep things really tight, but give it some room to run. So if you definitely switch to a 1-minute level, 1-minute, if you want to manage it on the 1-minute, definitely use a double protection layer. So let's go to the 1-minute. Let's go to our entry. And there's several things I want to discuss. Okay, so you got in this entry, this thing ran up. So I have a backside here. So we immediately have a good protection layer. We have one here as well. Price easily runs up, creates a, let's go here. If you hold down, by the way, if you hold down the shift button, it'll make sure it's horizontal. That barely took that out. You know, be a little lenient on 3 ticks. Same thing we measured last time. You'd want to have a little bit more leadway in getting out at that break level than just a baby little tick. And this is kind of a weak little break level anyway. It's only like 3 1-minute candles. Not much. Okay, so price goes up. What are our new protection layers? Well, you could have this for sure. And you can have this for sure. And there's a good add-on. Probably the exact same add-on as before. But there's a good add-on as well. So if you're using double protection layers, your stop is right here. 1, 2. Price goes up. Now this backside becomes a break level. Price goes up, comes down. Actually, it hits your backside. You could have added right there if you wanted. Price goes up. We have new protection layers. We got this. And I have this break level right here. So price goes up, up, up. Depending on how stringent you want to be, you could say, hey, I'm going to use this as a protection layer. And now if I'm doing double, I'm right here. Price goes up, comes down, takes that out. You're still in the trade. And then it bounces off that level, but then takes it out. So you'd be out right there. Not the end of the world. Good way to manage it. I mean, in this particular case, you missed out on quite a bit of profit, but not a bad way to manage it. Now, one of the things I don't like, one thing you got to do if you're managing on the 1-minute is continually switch to the 3-minute and make sure you're not missing anything. Let me show you what you're missing. You're missing. Now, does that really look like a break level on a 3-minute? Nope, it does not. You know what that really looks like? Looks like a backside to go long. But yet on a 1-minute, it had a different looking structure. Neither is right. I just want to point out both. One of the things that you can do if you're in, especially if you're in stocks or something, and you want to do this on a daily type of management. So let's do something here. I'm going to take all those. I'm going to delete them. I'm on the replayer tool. I'm going to delete that. Let's go to a daily chart. Let's pretend you're doing something really kind of big on a daily chart. Okay? So price went up, price was going down. Doesn't matter what time frame this is. They're all the same. Here's the backside. So you would have went short here. Let's make that, I like to make that green because I expect to make money, honey. So the thing goes down, comes up. That's a big old swing, but we're going to talk about that here in a second. Here's the backside. Here's the front side. So it depends on how you want to manage this. If you want to say, hey, I'm not getting out till it takes out my entry, okay, you're still in it. If you said, hey, I got these two protection layers, but man, we had a big move and I don't want to lose more than 50% of the move. So that would be somewhere in here you would have gotten out, 153 points. But in all honesty, if this was a 3-minute chart, you wouldn't be getting out here. I don't think so. You might have done the 50% follow. Or you might say, hey, I'm willing to take a break-even trade for this big trade. It's up to you. Then price drops. You establish new protection layers. I would choose this one. Then you got a new protection layer here. And you're technically still in this trade if you are using a double protection layer. Or you would have gotten out up here. It's real interesting. When George, me, I would have been out at 50%. I know where I would have been out. There's 50%. You know, in this case, it's obviously daily, but 150 points is not the end of the world. But you know what you would have done? You'd have made 150 points there. When it got back up to here, what would you have done? You would have re-entered. It's another entry right here. The heat on that would have stung. 60 points. We're on a daily chart, you have to remember, but they still behave all the same. So you're taking 60 points of heat, but it didn't take out the break level. So if you do the entries and exits idea, you know, and if you're on a daily chart, does 6 points become 60 as your stop? Don't know. I hadn't really thought about it. And you'd be up 500 points. Stupid. But they're fractal. It works on all time frames. Which time frame do you want to play? Let's do one more example. Let's go to an hourly chart here. Oh, let me get rid of some stuff here. Settings, I want to get rid of this. I want to go to ETH, so it's overnight stuff. So here, let's just go back in time a little bit. Let's go back in time. Let's go back in here because you clearly see some backsides being hit. I'm hoping that you can almost see them happening now. So here's the most obvious entry is this front side. This back side, you would have taken some heat, but you're on an hourly, so that's going to be pretty big. On a 3 minute, that's nothing. 20 points seems about appropriate for an hourly chart. And then as price started going down, this would have been another one of those trades that I would have just done 50%. I'm not going to allow it to come back more than 50%. So it went down 75. So somewhere about 30 points I would have gotten out. However, what would you have done? Here's a backside. You would have re-entered. How much heat would you have taken? Wow, 5 points. And then just gargantuan move down. And what I'm looking for when I'm watching this, I'm looking for, all right, there's an obvious break level. One here. I'm kind of just picking out these swing high deals right here. So probably would have gotten out here or here. Doesn't matter. Kind of same price. Let's say you got out exactly there. No, right there. 190 points. So you can manage this thing on different time frames. It just looks differently. But I like to manage them forcing price to break a break level. Force it to break a break level. Look at those all the way down. Let's squunch this up a little bit. I'm going to just mark this. Let's make it dash dotted because that's my... How many times did it take out a break level? Well, here's swing highs, no. Well, here's one it took it out. Didn't take those, didn't take that, didn't take that, didn't take that. And it wasn't until all the way down here. It's really hard for price to take out break levels in the opposite direction. So trade with the trend. Trade with the trend. And here's a beautiful thing. Let's say, and this is really important. This really is important. Let's say you were in this trade. You were short. Do you need any more trades? Nope. All you're doing now is managing your position and adding to your position as backsides are hit on the way down. Now you're just managing your position. You're not worried about whether you're going to go long or, hey, there's a level right down here and it's going to bounce. At some point, you're up so big that you get to play a bigger game. So I love this. All right, guys.